What we're going to now be discussing is India Inc.'s expectations from Central Exchequer Nirmala Sitharaman. We're now going to bring on board live veteran banker Keki Mistry from HDFC Limited, who's now joining us here today on ET Now. Good morning. We thought who better than you to start the budget week with and get a sense of what the expectations are at. If you were to even see your own business, how the revival we started to see in the housing sector, it's been strong. The banks have never looked better. Overall credit growth is only going up. The big question is, can all of this remain as is, if not get bigger?
I would say that the demand will be strong, not for 1 quarter or 1 year or 2 years or 5 years. I think it will be strong for several decades. You may have a quarter here and there where it's less, or another quarter where it's high. So let's not get into these quarterly aberrations which can keep happening. But on a sustainable long-term basis with a 10-year, 20-year view, I would say the demand for housing will remain strong for a variety of reasons. Firstly, the penetration level of housing in India is one of the lowest in the world, one of the lowest. Our mortgage to GDP ratio is about 11%. Compare this with China, which is in the 20s, or you compare that with some of the advanced economies where it's in the 60s and 70s. So we are very underpenetrated, and therefore the growth in the coming years, coming decades will be strong. That's number one. Number two, we have a young population. 2/3 of our population is below 35 years of age. The average age of a person when he first buys a home in India is about 37, 38, 39 years. That sort of age. So there are so many people, 2/3 almost of our population, which have not even really contemplated or are not even looking to buy a house today. But over the next 3, 5, 10, 15, 20 years, all these people will necessarily come to the market to buy a house. So you will see a structural continuity in the demand for housing in India for a very, very long time.
Okay, so the demand is very much going to stay intact. We're, of course, talking about a segment, the real estate segment, which has made a recovery, and how after almost a decade. Now, it's pretty clear, and it's been clear in the last 7 years as well of this Narendra Modi government, that housing is definitely one of the priorities. But because of the macros, the way the rates have been going up, there is pressure on the wallet, right? EMIs are going up. In fact, what we've also noticed is with pressure on the wallet from a market's perspective, SIP subscriptions are also down. The veteran banker, someone who's been around to see so many cycles, what is it that Nirmala Sitharaman can do on 1st of February just to make sure that the housing market stays the way it is and that we continue to see young Indians buy homes?
A housing loan is a 15-year loan or a 13-year loan if you take an average. In that period of 13 years, interest rates will go up and interest rates will come down. No bank can afford to give a 13-year fixed rate loan because you do not have access to 13-year fixed rate funding. And therefore, necessarily every lender in the market gives floating rate loans, where interest rates increase or decrease depending on where rates are in the economy. Since rates have gone up in recent times, the interest rate is higher, therefore the EMIs are higher, and therefore you see temporarily that people are, the amount of money that people are putting into systemic investment plans may have come down. But you must understand that a housing loan is a 13-year or a 15-year loan. And over that period of time, rates will go up and rates will come down. So it doesn't make too much of economic difference whether you take a loan at a time when rates are high or low, because if they are high now, they will come down. If they are low today, they will go up at some point in time. So in a long-term loan, it really doesn't make much difference when you take a floating rate loan. Now, coming back to the budget, what I believe would be probably the theme of the budget over the next couple of years. One is to continue facilitating growth. We, as I said, have done extremely well. Full credit to government, full credit to RBI for the measures that they've taken. But we should be on path to achieve a $5 trillion GDP by 2025. And if that means putting more in incentivizing savings, incentivizing investments, encouraging more of foreign money coming into India, encouraging manufacturing, these are some of the measures that may need to be taken over the next couple of years to put India on path to achieve that $5 trillion economy, which in my view would be very much and very pragmatic and would probably happen.
Mr. Mistry, hi, morning. Now, speaking specifically on tax, the government has reduced rates for corporates in 2020. Now, corporate tax growth since then has been pretty strong. Do you think this should be considered from a personal tax standpoint as well, a reduction in taxes perhaps, increased in savings and incentivized reporting?
One could probably look at is how do we incentivize more savings or more investment in the economy? If you look at tax rates, for example, we reduced the tax rates a few years ago for corporates. And as a result of the reduction in corporate tax rates, we have seen more tax collection. The tax collection has increased over time. Not only has the tax collection increased over time, but also companies with more cash in their hand have reinvested that money in their businesses. The businesses have grown, more jobs have got created, and as a result of the higher business, the incomes are higher, and therefore the tax paid by them is also higher. Now, whilst that was done for corporates, individual tax rates still probably may need to be looked at. The individual marginal tax rate in India is 43 odd percent, 42.7% if I recall right. So there might be some measure in place over the next 2-3 years to look at bringing that tax rate down so as to incentivize people to save more, to invest more, which will then result in economic growth, and it will result in higher tax collection over a period of time.
Mr. Mistry, request you to stay on with us. Lots more to talk about regarding the budget. We'll be back after a short break.
Babe, I love this apartment. Island kitchen.
लॉक करें?
और जब ये नया फ्लाईओवर बन जाएगा ना, Mom and Dad will be just 20 minutes away.
तो परफेक्ट नहीं है घर.
इसीलिए housing.com with maximum properties. Housing.com पर से perfect.
When timeless European design meets cutting edge technology, it's QO. QO, European bath lounges.
First trades and still in conversation with Keki Mistry from HDFC. Keki, just getting back to the conversation, because there's also, plenty of focus on PLI and the schemes have done well. You've got a good ear to the ground. How much of an impact is it really making on manufacturing in your view, and what's the potential like?
Globally, all over the world, people are now looking at this China plus one policy. So India should be the biggest beneficiary of that. And we probably would be the biggest beneficiary. So any measures that can be taken to encourage manufacturing, encourage more people to bring capital into India for businesses will not only create jobs, increase the FDI in the country, but also lead to overall economic growth. So that's another area. Now, manufacturing today is about 17% of our GDP, whereas globally in most countries it's around 25%.
Right. We've also spoken about the need for incentives, but the challenge here is whether the government has the fiscal bandwidth, because, the deficit has been higher than what it has been in the past. So how do you think the government can strike a balance this time?
All right. So first of all, let me tell you that whilst the fiscal deficit might be a little higher than what it was in the past, it was largely induced by COVID. Otherwise, the fiscal consolidation part, which was started a few years ago, has continued unabated. And I would expect that that will continue even in the current year. Because we've had very robust collections in terms of taxation and GST, I would think that the fiscal target will be more than met in the current year. And the aim would be to reduce the fiscal deficit in the coming year.
Mr. Mistry, I asked you earlier the impact on inflation of the wallet and how that was impacting home loans and the way the rates are moving up. But just talking a little bit more about that was from the consumer's perspective. What about the developer's perspective? Because as we all know, the cost of construction has also gone up. It's impacting the balance sheet. And therefore, then what does it mean for financiers like yourselves?
Well, I think I've already talked about the housing sector, that if we encourage housing sector, construction will happen. Construction it's a matter of demand and supply. If the demand is there for a product, the developers will construct more and more projects. And we are already seeing that in the last couple of years, the number of projects getting launched is increasing all over the place. Now, in the affordable housing space, the CLSS scheme that the government had which has got discontinued now with the period was over, could perhaps get revived, because that will create further impetus for demand in the smaller towns amongst the affordable housing segment, which will then encourage more construction to take place in those markets.
Right, and there's also a lot of chatter around the capital gains tax, and one really has to streamline the capital gains tax structure, and the other is to increase levies. What is your outlook? How do you believe the government should approach this?
I think capital gains is an important mechanism for the capital markets. Any sharp increase in the capital gains tax rate would create a negative sentiment as far as the markets are concerned. It may affect further investments. So, in my opinion, all we need is a harmonization of the capital gains tax rates. We have different rates for different kinds of gains. Different rate for equity, unlisted equity is different, listed is different, debt is different, and so on and so forth. So some harmonization could be required, in my opinion. But at the same time, I think increasing capital gains tax rate is not, in my view, necessarily a good idea, because it would slow down the investments in the capital markets, which is so essential for growth.
Sure. But divestment has proven to be a challenge for the government. How should the government then pursue this challenge going forward?
Divestment is a function of capital markets. So if the capital markets are strong, divestment, the ability to divest, the ability to list some of the public sector units will also increase. So it's a matter of time. To my mind, divestment targets should be met in the coming years, because if you have a robust and a buoyant capital market, which is what we've seen for a long time, I see no reason why divestments cannot increase.
Mr. Mistry, I've interviewed you too many times in the run of budget to ask you to rate it before the big event, and whether you think it's going to be the biggest one is yet, but maybe that's a conversation we can have on the 1st of February post the speech. Many thanks for being with us today.